Hi there, welcome to Kneppy Invest. As I fix my microphone just a touch. Interesting week in Australia on our market. A bit of a red week. In fact, one of the worst weeks we've seen. In fact, I think it's the third worst week we've seen since COVID-19. So we're talking about 5 years. Yeah, 5 years. Can't believe COVID-19 panic was 5 years ago. Yeah, the third worst week in 5 years, really led by the banks, in particularly NAB and Bendigo Bank. In fact, what I'm going to do in today's video is going to bring you a few extra ASX indices, including the bank one, the tech one, and also the ASX200. So a little bit more added Australian flavor in today's video. So 5 down days in a row. More than likely, it's going to be 6 into Monday because of the negative end to the week in the US. And there probably are a few reasons behind that, but I really don't care. The market's down. This could be the start of a new downtrend. We just don't know at this point in time. It's too early to say. But personally, I probably will be taking a fair bit of profits. I just want to build up my cash levels just because I've bought some land and will be building, and I just want a little bit of extra cash. And I think what I'm going to do is maintain a holding in my better positions, the companies that are doing stronger, and transfer. I do have a bit of cash in my super, and transfer some of my small caps that I don't really want to sell to my super. So that includes actually Bioxin, Pentanet, because I do think the market is being silly with that company, operating cash flow, free cash flow positive, and maybe a few other companies as well, because I don't want to sell those. I do consider those trading positions, but I don't want to sell them. And that's my love affair with microcaps. I've had a love affair with microcaps over the past 10 years. It developed quite quickly back in 2013, 14, just after I started investing. And on occasion, I've done fairly well. On occasion, not so well. But I have pivoted more towards a non-story microcap. So I used to be really fascinated with story stocks. And those are or had been the investments that did not do me well. Typically, it's the profitable microcaps that have done me well, and I think I should sway towards my strengths. And it seems my strengths is investing in those type of companies. I don't have the stomach for story stocks. Anyway, so that's what I'm planning to take a bit of cash this week. I'm just wary that the market is down, and I don't think it's the best practice to sell when the market has been down for 5 straight days. I wish I was doing this last week. Anyway, so a bit of an added Australian flavour, but otherwise, everything is similar. Now, towards the end of the video, I will be showing you some individual companies' charts. They're all banks. We're just looking at the banking sector. In fact, I think it's 11 banks. There's, I think, more than 11 banks you can invest in the ASX. In America, it's like 5,000 because banks are there a little bit. You have more regional banks, you have the big banks, but also way more regional banks. Australia a little bit more concentrated. But yeah, some of the banks' charts are looking interesting. I have an investment in one, and that's a trade with Judo Capital, and that's doing well so far. Okay, so let's go to Australia. We'll start off with the XGO as we always do. We're not stopping here. And yeah, 5 down days in a row. And I think it's going to be 6, and I wouldn't be surprised if we see a fairly weak week. Oh, I used the word weak twice there, and I can understand why those who are learning English have a hard time. Yeah, it was a weak week. Anyway, and I know it was a week, and I wouldn't be surprised to see another week. So maybe a weak fortnight. Fortnight is not a word they use in America, which I discovered when I moved over there. I said fortnight a few times to blank stares. What's that? And I was like, what? You don't know the word fortnight? Anyway. So if we have a look at the weekly chart for the XJO, down, what was it, 4%? No, 3%. No, 3%. Down 3%, which doesn't seem a lot, does it? Doesn't seem a lot, but when you go back through time, it's one of the worst weeks we've had for a while. Not that long ago, we had a down week, 2.76%. What week was that? That was December. Yeah, 2.76. That looked pretty bad. If you go back to, remember August, there was that yen carry trade. The worst week there was down 2.1%. It was because it was a very short-term down period. It's like 2 days we saw the market down and then recovered fairly quickly. So that's why you don't have a really bad down week that week or that period. Back in in April of last year, we had a week where it was down 2.84%. Maybe we're panicking at that point. I don't know. But you can always see these little down weeks. It's a lot of down weeks. A few good weeks, but a lot of down weeks as well. But you have to go back all the way to June 2022. So we're almost 3 years to the last time we saw this sort of bad period. And in fact, we had 2 bad weeks in a row. I still remember that fairly well. Down 4.24% into June 14, down 6.6% for that week. And that was the bottom. In fact, we had a double bottom not long after. I think October was the second part of that double bottom. No, September or October. And then previous to that, you have to go all the way back to COVID-19. And that was a horrible period for those who are fully invested because we had down weeks, 4 in a row, 9.8, a bit of a spike the next week, 3.5, down 10.9%, and then down 13.1%. And that was the worst week. And then we had a really interesting 1 week candlestick, a bit of a doji, up a little bit. And then we had the recovery, the V-shaped recovery. I was doubting that point that was going to happen, but just because the massive amount of stimulus, we saw a V-shaped recovery. Anyway, so the other thing I should mention is with this down period or down week, the XYO is right on top of the trading channel. So there is definitely room for way more weakness in our market because we have been toppish or looking toppish for about 3 months at the top of the trading range. So I wouldn't be surprised to see us fall all the way back to, say, the mid-7,000s. I think that's feasible. If it goes any lower than that, maybe a recession, we could see it go all the way down to 6 or the high 6,000s. And if we go into maybe a deep recession, a lot of panic, you could see us go all the way down to maybe 6,000, maybe even lower if it was in the worst case scenario. Anyway, so another reason why I don't mind going to a little bit of cash now, just because we are looking a little bit toppish. And we've had a really good run. If you go to the bottom, or the bottom of this run, back in October 2023, 6,800. So we've gone from 6,800 to 8,300 in 18 months. So that's a pretty good run. Now onto some of the indices, starting with the XSO, which I always look at. And not a bad week for the XSO. XSO only down 0.53%. In fact, if you have a look at the daily chart, it does look pretty bad the last four. Not bad, not XGO bad, but Monday started off pretty well. In fact, it was up 0.6%. So it was a pretty good start to the week for the XSO. And in fact, it looked pretty promising, a potential breakout. We were looking for the XSO to get above this dash line. It did, and then has pulled back below it. But if we can see the XSO rally during the next few weeks, that'll be really good. We want to see it get back above the previous high we saw on Wednesday. And that high is about 3,260. So not looking absolutely horrible for the XSO, but don't forget that the highs in the XSO are way back in 2007. Yeah, so I've changed my thoughts on the XSO just because you come to the realization that many of the best companies in the XSO, if they do succeed, will move on, will move out of the XSO because they just can become too big. And that is exactly what you want. And then there's some companies that move into the XSO because they're big and then they drop in value. Those are the sort of companies you don't want in the indices. So a lot of the best companies move out of the XSO because they're too big, and a lot of the crappy companies move into the XSO because they're crap. And so not the best indice, I think. But anyway, it's a nice little proxy for small caps. I do prefer micro caps than small caps because if you do have a look at the makeup of the small cap indice, a lot of, in my opinion, pretty big companies in this, and these pretty big companies are the sort of companies I would invest in. Anyway, now on to 3 new indices I've included in this video. Might keep it in this video just for context in future videos, and might include further ones, some more ones. So if you like an indice on the ASX that I haven't featured, maybe just leave me a comment and I can move to that. The first one is the XTL, which is the ASX200, and pretty bad week for the XTL. So if you haven't invested in the bigger companies, and I would assume many investors in Australia are focused or concentrating the ASX200 because safety, and these are big companies that can't fail, that sort of thing, less risk. Well, last week was not a week for you. down 4.35%. Again, the worst week this index has seen since June 2022, when it was down 6.87%. So in a way, this was I think it could have been the 4.25. Yeah, this was actually the second worst week for the XTL or the ASX20 since COVID-19. Yeah, so these sort of weeks don't happen all that often. And it's been a nice little run for the ASX20. And the main reason we have seen it, not only this index for, but also the XTL, is because of the banks. And we will be looking at the bank index in a second. And if you have a look at the daily chart for the XTL, you can see a pretty dramatic drop. Now, just based off this chart, not panic stations just yet, because on occasion we do see the XTL just drop below the 100-day moving average and then rally. So we need to see a rally. We can see it happening 1, 2, 3, 4, maybe in 5 times in the past. It's happened again. So we need to see a rally, because when it's happened in the past, we do see the XTL rally. So the uptrend is still intact, but I wouldn't say panic stations just yet, but maybe. In fact, we might be able to draw an uptrend line. Not really. It's not the best. It's not the best uptrend line, but it's close. Okay, so that's the ASX20, but now on to the really interesting index. And this is the ASX200 Banks. So it's not the top 200 banks in the ASX. It's the 7 banks that are in the ASX200 or the XJO. So those 7 banks would be, of course, the 4 big banks, Macquarie, Bendigo, and Bank of Queensland. I actually just had a look at the ASX 200. Judo Capital is now in the ASX 20 or 200, so maybe it should be 8 banks. Anyway, and we'll have a look at the charts of all those individual banks later in the video. Okay, so let's have a look at this horror show, which is the XBK. We'll start off with the daily chart. Okay, it's starting to look a little bit negative. A beautiful uptrend with the XBK. In fact, the 100-day moving average has acted as support during this run. So this particular index broke out back in late 2023. And before that, nothing much to really write home about. Beautiful breakout. Of course, these sort of breakouts don't coincide with any positive financial news. This is just a chart breakout, and we don't see volume either. So just a beautiful breakout in late 2023. And on occasion, it does pull back. And we have seen it pull back to the 100-day moving average quite a few times, 3 times, almost 4 times, but 3 times. And that has acted as support each and every time. In fact, no, right there, 1, 2, 3, 4, 5, very close to 6 times. We have seen the 100-day moving average act as support. And what has happened in the last 5 days, in fact, it's been 1, 2, 3, 4, almost 6 days. So what's happened in the last week? Just an absolute collapse in the banking sector, led on by really bad results from Bendigo and also weak trading results from NAB. The Bendigo results were quite stunning. Share price down 16%. Even NAB with a pullback in profit down quite a bit as well. CBA, which did release the results the previous week, I think, or maybe the week before, relatively good, okay results. Profit up a little bit, but no growth. And as Alan Kohler has mentioned, we have that confirmation. He believes CBA is a bubble. I believe that as well. CBA is a bubble because very little growth, and the P/E ratio of that company is priced at a significant growth company. Anyway, bad week for the banks. 5 down days in a row, and there's no end in sight. And where it is right now at the end of trading on Friday is at a really interesting level. This dashed line is a support level. That was the previous low we saw back in December. And we don't want to see it get lower than this, because the definition of uptrend really is just high highs, high lows. That's all you want to see, high highs, high lows. We have seen this with this particular index time and time again. Look at that high, and each of these highs have been higher than the previous one. Each of these lows have been lower than or higher than the previous one, up until maybe now. So this is the time when maybe we have seen a lower low, which means this could be the start of a downward trend. Now, I'll probably need confirmation of that. This could be the start of a consolidation period going sideways, or this could be the start of the turn in sentiment and the trend in the banks. So I would also say maybe it is oversold. The way to know that, I don't always look at RSI, sorry. RSI, well, I was thinking, where is it? But yeah, it is on the precipice of being oversold, which makes sense because it's been a very sharp sell-off. You could say it's oversold. And if you go back through time, it very rarely gets to this level of being oversold. It briefly did that in December, and then we saw a rally. It did it back in October, and it rallied right on that. It did it back in August, it rallied. So each time the banking sector gets to this point where it's oversold at this level, we see it actually rally. So maybe, just maybe, this is a time to buy some banks based off the RSI and the fact that it's oversold. I'm not sure about that. Not sure, just because I think the sentiment has shifted on the back of financial news. And that's the most important thing. This is on the back of substance, financial news, when that financial news is fairly weak. So interesting level. And if we see it fall much below here, so what level is this? This is about 3,530. If we see it fall much more below here, and then we see a little rally, and then we sort of like this. I think I can draw. I can draw, but I figured how. So we see if we go like this. No, I'm pretty sure there is some sort of drawing brush. So we go like that, and then we go like that. Go back up to that resistance level, or no, support, now resistance, and then we go like that. Yeah, so that would be like a downtrend that you could see happening from here. Now I've got to get rid of that. There we go. No. Anyway, I'll figure out how to get rid of that later. Okay, so that's the XBK. By the way, for the week, down almost 10%. 9.96%. Last time we saw that bad of a week was back in June 2022, down 10.63%. The following week, it was down 7.5%. So a couple of really bad weeks for the bank then. And before that, geez, what's happening here? What am I doing? I think I just want to get back up to this point. That's what I want. So get rid of that, and we can get rid of that. And during the COVID-19, it was just a really bad 4-week period for everything, really. Interesting enough, this indice doesn't go back that long. No, it doesn't go back. I mean, when I say it doesn't go back that long, I mean it only goes back to the middle of 2019. So it's sort of a new indice. There you go. Okay, that's the American or the Australian indices. Now on to the American ones. And NASDAQ down 2% on Friday. I haven't really dug into why. Existing home sales, much lower than their forecasts. In fact, let's just zoom in a little bit. No, that's in the next week. Anyway, I'm not sure what happened. If we can go to maybe trading economics, that maybe this could tell me why. US private sector growth slows sharply. US stocks tumble amid economic concerns. US stocks plunge on Friday as economic data raised concerns about a slowing US economy and persistent inflation, prompting the investors to seek safer assets. I'm seeing that even in the ASX. We're starting to see a lot of the small caps I do like, micro caps I do like, they're starting to be sold off. And those are the riskier assets, riskier positions. And I think what's happening now is there is this perception that there is this possibility of the economy slowing, and you want to get out of these riskier assets and put your money into safer assets. And that's exactly what they're saying here. I mentioned this yesterday, this video, because I noticed quite a few of my favorite Microsoft share price have shown signs of weakness. So possibly that is what's happening right now. United Health shares plunged 7.2% following reports. The Department of Justice investigating its Medicare billing practices. Anyway, that's what's happening. It's just a bit of concerns about the economy right now, and I don't think Trump would be liking that at all. Anyway, so NASDAQ down 2%. Even though it's down 2%, it's just coming off its all-time high. So would you be panicking just based off this weekly chart? No way, Jose. Even a daily chart, no, there's no reason to panic. I mean, we had a really bad week back on the 18th of December, or really bad day, down 3.6%. This happens on NASDAQ a lot. 7th of January, down 1.79%. It just rallies. A lot of fickleness. I think the American market is way more fickle than the Australian market. You see share prices of companies going up and down 20% on a quarterly report, and the next quarterly report up 20%, down 20%. You see it all the time. It's just weird how short-term focused they are. Anyway, that's the market over there. I have no concerns about the NASDAQ. It's still on a beautiful uptrend. And both daily and weekly. Dow Jones, on the other hand, I wouldn't be panicking when it comes to Dow Jones Industrial, but it has struggled to get above this dashed line, which is a nice little resistance level. So it's twice it's failed to get above that level. So the thing we want is high high. So this is the first time we've seen it struggle to get to a new high after a while. It's been this uptrend for a long time. And we can see all these lows are higher than the previous low. And so we don't want to see the next low to get below this level. So this is the important level. In fact, I'm going to put it right about there. I'm going to put it right there. We don't want to see the Dow Jones go below that level, which is about 41,750. So still well above that, but we have seen a couple of down days in a row, and Dow Jones week was fairly negative, down, what was it, 2.51%. But still, weekly chart looks fine, daily chart looks fine at this point in time. No reason to be panicking just yet. Russell 2000 down 2.94%. So this also fits in the theme that some of these more perceived riskier assets, there's a bit of a rotation out of these into the safer stocks, maybe some of the tech stocks, I don't know. And that does sort of seem like that may be the case with Russell 2000 down almost 3%. If you have a look at the daily chart, yeah, so it's only been one bad day. And in fact, I use this purple box, and we don't want to see the Russell 2000 fall below this purple box and stay below. That would be a really negative move. In fact, we might be even seeing a bit of a crossover in the moving averages. Now, the moving average crossover back in December 2023, which sort of signifies, or one of the signals that something is in an uptrend. And we have been seeing the higher highs, higher lows. But with this down day, and if we fall below 2,160, not we, but this indice, that would be fairly negative move. So 2,160, I'm going to put a line right there. 2,160, that would be a keen level for this particular indice. And it is showing signs of a bit of weakness right now. So Russell 2000. Now onto some international indices, starting with the Nikkei. And just going sideways. Do I really need to speak anymore? Just going sideways, down a week, but not down all that much, down 0.95%. The previous week, it was up 0.93%. So daily chart just tells me it's going sideways, just consolidating, which is fine. Hang Seng, probably the indice to be in. China is the place to be in. In fact, Hang Seng was up 3.99% on Friday. And what a absolutely stunning recovery. This really has been led by Alibaba, maybe more than Alibaba, but Alibaba, which I do have a bit of a holding in, Alibaba has just gone bananas. Maybe they sell a fair few bananas, and maybe they're doing well by selling bananas. I don't know. And just gone bonkers. Just gone bonkers. Yeah, this is an absolutely stunning chart, Alibaba. They did release results, if I remember correctly. Fact of the day, Alibaba's latest earnings exceeded forecasts fueled by strong online retail, and cloud revenue. The company plans to increase capital spending over 3 years, emphasizing AI products. China stocks, why the party is just starting, from Zacks. These stocks moved the most today. Should read all stuff like this. Anyway, so absolutely stunning chart from Alibaba. Look at the volume as well. Beautiful volume. I will maintain my holding in Alibaba, I think, for the time being. So back to Hang Seng, and there seems to be a bit of an overlap there. Maybe there is a lot of correlation between Alibaba and Hang Seng. I don't know. Now onto the DAX, which has been an interesting indice because the German economy and DAX are completely separated. There's no correlation there, it seems. But we have seen a bit of weakness in the DAX in the past week. Down a fair bit on Wednesday, 1.8%, down 0.53% and 0.12%. I expect a fairly negative start of the week as well. and for the week down 1%. But still, after a 5-week rally, DAX showing a bit of signs of a pullback, but a pretty stunning chart, weekly chart for the DAX. Even the daily chart still looks pretty good. No reason to panic with that one. It's just a bit of a pullback. And the FTSE, this could be just a pullback as well. Yeah, so beautiful breakout. Down a little bit for the week, down 0.84%, but again, not panic stations for the FTSE at all. Okay, that's the international indices. Now on to some commodities, and I'm just having a look at the commodities. It's a sea of red. Sea of red until coal. Tin had a good end of the week. Nickel as well. Oh, cocoa down big. That's pretty good for my chocolate habits. Eating habits are down 9.29%. I actually did buy some Hershey. Not the chocolate bar, their chocolate's awful, but I bought some Hershey because I think this company is looking really cheap. And I was thinking, oh, look at that run. Yeah, I was thinking this company was looking really, really cheap. And I think one of the main reasons share prices dropped a lot is probably because of price of cocoa. So I thought it's probably looking cheap. Also bought some Pepsi, not the drink. Well, technically I did buy some drink Pepsi, but I bought the company as well. So this is Hershey's weekly chart, and yeah, so pretty big dip. And I think Pepsi was looking really, even though I should be talking about these because, yeah, so the reason I bought Pepsi was also, if you just have a look at the share price where it is now compared to the 200-week moving average, it's below it, and that's the time to buy Pepsi. Yeah, anyway, so back on to commodities. So pretty negative week, but some commodities were up. So let's have a look at gold. Gold, well, weekly, in fact, we've had 1, 2, 3, 4, 5, 6, 7, 8 up weeks in a row for gold. It needs a breather. I do think it needs a breather, either a little bit of a pullback or at the very least going sideways. And occasionally we do see it pull back. The last time we saw it pull back, it pulled back to the 25-week moving average, and that was a nice little support level for gold. And in fact, it's acted as a support level for gold for a couple of years, well, 18 months anyway. But with this sort of run in gold, we've seen it'll always be positive and healthy for it to pull back a little bit. The last 3 trading days for gold have been sort of flat. So maybe we're starting to see a bit of a consolidation. And you can see not much buying and, well, not much buying, not much. Probably the way I can say it is the buyers and sellers have been equal. There's the enthusiasm of each have been sort of the same. So we don't see much movement in those 3 days. So maybe this is the start of a little bit of a dip. Maybe, I don't know. Could go either way. So still positive with gold. I do own Western African. I've been thinking of selling Western African because I just need a little bit of money, and that's one of the positions I've been thinking of selling. But I am also conscious that West African is starting their new mine, and I'm just wondering if the market is not really appreciating how much extra cash flow this company is going to generate. I'm not sure if the market is aware of that. So that's one of the main reasons why I'm a little bit hesitant selling West African. Anyway, so that's one of the positions I could sell to increase my cash levels. But based off this chart, the question would be why? By the way, this is the chart for West African. I've held this for quite a few years. Sort of when they first went to production, I bought some shares. This is quite a few years ago. So we're talking about, I forget when they went to production, 2020 or 2021. Anyway, so you can see a fair bit of movement in this company's shares, but overall going up. But I'm just thinking, maybe I should take profits. Anyway, so gold's still looking okay. Silver, I don't mind silver. I don't mind silver at all. I think this is signs of a bit of an uptrend. Funny enough, I've just included the 200-day moving average, and if you have a look at this 200-day moving average, it's hit the 200-day moving average twice in the past 9 months, and that was a time to buy silver. So in August and also again in January. But otherwise, not as good as gold, of course, but no complaints about silver. That was a daily chart. Weekly chart looks fine as well. I'm just going to get rid of the 200 moving average. Just want a little bit cleaner. Copper. That's the weekly. Oh, actually, we'll go back to the daily chart. It wanted to break out. I think that was last week, wasn't it? It wanted to break out. It's pulled back. I want to see copper rally from here, but it's called what's it called? Dr. Economy or something like that for a reason. Copper is always thought as a sort of a proxy for the health of the economy. And if there is some thoughts that the economy is going to Dr. Economy, Dr. Copper is a nickname for copper. Did I say Dr. Economy? I meant Dr. Copper. Dr. Copper is a nickname for copper in the financial markets because it's used to predict economic turning points. Copper is a key component in many industries and products, so its price changes often reflect the health of the economy. Yeah, so at this point, you can't say anything. But I'm more bullish than bearish with copper. I'd like to see it rally. I'd like to see it get above these highs we saw a week ago. Now, that would be a good move. Good move for copper. Now on to iron ore. I don't mind this iron ore chart. This is the sort of thing I'm looking for. So price of iron ore was in a bit of a downtrend, going down, 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 down. Showed signs of a bit of a consolidation period. A few moving average crossovers. Then we saw a moving average crossover back in late January. And iron ore has just been sort of gradually going higher. Just, it's just very slowly going higher. I love to see that. Because you don't see day traders taking advantage of this because it's slow grind higher. I don't mind this. So I do like this chart for iron ore. A bit of a pullback in the last few days, but that's okay. In the week for iron ore, it was down slightly. Well, 0.88%. I wouldn't have imagined that. Oh, that's Monday. Okay, I can see that now. That's not real. I think I'm looking at the new week. Yeah, that's the new week. Last week it was up 1.93%. That's better. I just don't know how they can start a new week. We haven't even started Monday yet. Anywhere in the world, even is it Western Samoa is the earliest country, whatever you call it. Anyway, first country to experience New Year's. There's a small island. First country on experience New Year's. There's probably a better way to state this. Furthest east country, I don't know. Kiribati, that's it, Kiribati. Kiribati. Maybe Western Samoa is, I know American Samoa is on the other side. First countries to experience New Year's. Kiribati, Samoa, and Tonga. The closest countries to the international day line. Maybe that's the question I should ask. Anyway, so I don't mind the chart for iron ore, but I haven't really bought any iron ore companies to take advantage of my a little bit more bullish stance on iron ore right now. Talking about not being bullish, I'm definitely not bullish on uranium. How can you with this? This is a spot physical uranium, and it's looking ugly. Looking ugly, no reason to be excited about uranium right now. That's my opinion. In the short term, you could be bullish in the long term, but I'll be honest with you, I am not bullish nor bearish on any commodity for the long term because you just don't know what's going to happen. I'll be honest with you, you just don't know what's going to happen because there could have been some people who are very bullish on the long-term future of uranium back in 2010. Actually, when was that Japanese tsunami? Was that 2011? I can tell just by looking at this chart. It would have been, just based off this, there was a massive drop. March 2011. Spot physical uranium dropped 18.6% on that day. So it would have been then. Anyway, so there probably was someone who was really bullish because just before that, you can see uranium went on a bit of a spurt. So there would have been some people who were very bullish on uranium and they got hit hard by a black swan event. And you just don't know what's going to happen. Weekly chart for uranium looks weak. Again, same word, but different uses. Daily chart looks weak. And I think I put in this sloping dashed line as my entry point. When I see it break above that, that downtrend line, that would be my get in, maybe, for uranium. But there's no point getting in uranium right now just because it's in a downtrend. We just don't know how long the downtrend is going to go on. Oil had a really bad end to the week. So down 3.24%. This would be on the back of concerns about the economy. So if we do have a really weak economy, going into recession, deep recession, depression, people use less oil. Yeah, it's a fact. By the way, oil is not something I would ever trade. It's gone nowhere over the last 20 years. And the other thing I noticed, if you have a look at the 1 hourly chart for oil, it just collapsed when the American markets opened. So it fell 1% in that first hour. Look at that collapse. And it's fun enough, just by looking at this 1 hourly chart, there's a bit of support right there. So it is a support level on the 1 hour chart. On the daily chart, well, you can even see the support there. But it's been much lower than this in the past, last half of 2024. So it could go lower from here. But it's amazing how quickly sentiment in oil has changed. It was actually looking quite positive at the start of this year, and it's just turned negative since then. Gas, we'll go through the rest pretty quickly. Gas actually looks not bad. Lithium, no reason to get excited about lithium, but just yet. Coal has been looking really weak, still looks weak, a little bit of an uptick during the week, but nothing to get excited. Looks pretty ugly. And coal companies on the ASX, they all look ugly except maybe Yancoal. Tin has been looking really good. I don't mind tin at all. And the one to be in this one seems like it's Metals X. I think I did show Metals X in last week's video. This one actually doesn't look bad. This one broke out last week. Yeah, this looks pretty good. I like Metals X. Again, I'm not sure if I'll trade. This is not the sort of thing I'll trade right now, just because it is a commodity. But I want to, right now, I'm being conscious that I want more or safer uptrends. And for me, commodity-driven companies aren't that safe or predictable, because who knows, next week tin could drop 30%, and that would significantly affect Metals X. Nickel, I don't really care much about nickel, I'll be honest with you. I read a lot about nickel a few weeks ago, and it was about China, Indonesia, and the nickel market, and I don't see any blue sky ahead for nickel at all. Anyway, so Palladium, no real interest in Palladium just now. I was sort of getting a little bit excited back in October, but that excitement was very short-lived. So nothing on this chart. And cocoa, beautiful drop in cocoa. So maybe the cocoa farmers in West Africa have found a bit of cocoa bean stuff. Cocoa news. Let's see what's happening. See if there's anything. Cocoa prices fall on demand concerns and British pound strength. Who would have thought? Cocoa prices sink on demand worries. Sort of, I can see that. So I'm eating less chocolate. I can guarantee you that much. I'm eating way less chocolate now because every time I go in the supermarket, I see the price of chocolate. I go, well, I'm not going to buy chocolate unless it's on special, like our price. Climate change is threatening cocoa crops. Cocoa crops, researchers say. No duh. We're saying that right now. Anyway, the worst thing is when you have itchy nose. Anyway, that's cocoa. Now on to Bitcoin and Ethereum. Still below 100,000 for Bitcoin. Trading in the channel. I do have $6,000 in Bitcoin, so I bought $2,000 worth when it was like 30,000. Yeah, 30,000 would have been 30,000, and I'm thinking, well, it's now gone up 6,000. Should I just take that and use that money? I don't know. It's going sideways. It's in a trading channel. I would like to see breakout. If I do see breakout, that would make my decision. I wouldn't sell at that point, but I don't know. It's sort of like property. You don't get, there's no productivity value out of Bitcoin. Well, no, I should put it this way. If someone argued with me that property is a Ponzi scheme or Ponzi, whatever you want to call it, I'd say, yeah, I could see that. Same thing with Bitcoin, same with gold. Can't say that about companies or the stock market because there's something backing it up. There's financial numbers backing it up. Companies grow, they increase the share price because of the financial numbers. You can't say that about property, you can't say that about Bitcoin, because what you're hoping in all these assets is you want someone to come in and buy at a higher price. And the reason why companies' share prices go up, ideally the reason why is because of increased performance in their financials. So that's one of the reasons why, Bitcoin, I have no confidence it could go higher or go lower. The main reason I bought some Bitcoin is just as a hedge, and also diversification when it comes to assets. And I thought cryptocurrency was a nice little diversification. And I also think I bought on a technical breakout. I'm trying to remember when I bought. It was quite a while ago. 30,000. It was on this breakout, I believe. Yeah, it was this breakout right here. Yeah, at about 30,000. Yeah, it was on that breakout. It was actually a nice little breakout. Somewhere back then, anyway. Anyway, that's why I'm waiting for a breakout for Bitcoin. Ethereum, no, I have no interest. And it's, if you look at the daily chart, nothing there for Ethereum at all. No trend. In fact, it's been trendless since the start of 2024. We'll say February, March. I get onto bonds. 30-year bonds, American bonds have been sliding away. And if it falls below 4.65%, that would be interesting. Down 1.43%, and that would be on the back of concerns about the American economy. And because they would have concerns about the American economy, those concerns would be suggesting or saying, or their argument would be, well, if the economy does weaken, that means interest rates will drop. Hence why bonds yields should be dropping on the thought that, interest rates will drop in the future because of the weak economy. And the Australian 10-year bonds down 1.62%. There you go. And maybe TLT is the time to get in. Maybe it's time to get interested in the TLT. Although the chart's not looking crash hot. And finally, currency. Oh, Australian dollar it's not looking as bad. Yeah, someone told me, Australian dollar could fall to 50 cents. And I said, as a counter, well, it could also rally to $1. You just don't know. People would always have their opinion on which way Australian dollar would go. And I'd say half of them are going to be wrong. Half of them might be right. And then the next time, those half that are right are going to be wrong. It's almost impossible to predict which way the dollar is going to go, in my opinion. Okay, now on to some charts. Banks upon banks upon banks. I think I have listed these banks in order of market cap. What I might do is look at these banks in reverse order. So the first one I've got here is Kina Securities. Chart doesn't look that bad, actually, for Kina Securities. This is Papua New Guinea Bank. I have a feeling they also have other branches throughout the Pacific. I could be wrong, but primarily Papua New Guinea. I'm just going to see, TradingView, what it says. In fact, it just mentions it's headquartered in Port Moresby. The first time I really noticed this bank was back at the start of 2024, because there was a bit of a breakout. Looked like share price was trying to rally at about 78 cents, I thought. And also I looked at the financials and went, geez, this bank is really cheap. And it's funny enough, the rally in the share price of this bank occurred simultaneously with the start of the rally in the Australian banks. Sort of interesting. But this company is way better valued than those. And in fact, I think this company has much more scope for growth. So you could not complain, but you could just mention how bad PNG is. But the potential for growth in Papua New Guinea and some of those other Southeast Pacific islands is significantly greater than Australia. That country has growth or potential for growth. In fact, I would not be surprised if PNG grows at 6% per year. PNG GDP growth. 2.7% in the fourth quarter. Projected to expand at 4.8% in 2024, but that's last year. So it's definitely not a rich company, but those are the sort of companies or countries that have more potential to grow. They have the potential to grow at a significant rate. Trading economics. Anyway, so there's some years where it goes quite a bit, some years where it doesn't. Anyway, so there is potential for growth in this country and this company. Market cap is only 326 million, so it's not big. P ratio is 8.11, and the dividend yield is 8.81%. So even though it has rallied from 78 cents up to $1.13, still you could argue this is cheap, but maybe a bit of a risk, bit of a heightened risk with Kina Securities. The next smallest company is MyState. I don't think this is going to be smaller for much longer. Well, no, it will be because Judo Capital is the next biggest, and that's over $1 billion. MyState did make an acquisition of Aussie, I believe. Actually, this is a nice looking chart. It's not a bad looking chart. A bit of weakness in the last week. Share price down a fair bit, in fact, which is not surprising. Share price down 9.86%. I believe there would have been a lot of volume the previous week because of that acquisition. Let's see. There we go. Oh, merger, not acquisition, merger, sorry. 755 merger with Aussie, creating regional banking powerhouse. Not sure about that, but maybe it's true. Still, market cap is still well below Bank of Queensland and Bendigo. But anyway, a bit of weakness in MyState, which is understandable. Now onto Judo Capital. This is one I am trading right now, and they did release the results. The results were good. This is the growth bank in Australia. And I would say because of increased competition, that has led to lower margins for the big banks. Even among themselves, they are fighting for mortgages. It seems like all the banks have pivoted towards mortgages in the housing market, maybe over the last 20 or so years. So more competition. And Judo Capital, when you have a look at their numbers, nice growth. So looks like they are getting market share from the big banks, and the chart looks good. So even though we saw a significant weakness in the banking sector, this is not one. In fact, on Tuesday, share price rallied 8.53%. So this is by far the best looking chart for all the banks, by far, except maybe Kina, except maybe the next one I'm going to show you. So would I be willing to sell this one? At this point, no. No, this one is one I might be willing to maintain a holding. Now to BFL, which is Bank of Pacific. So it's BSP, which is Bank of South Pacific. Headquarters, I'm going to say in Fiji. I could be wrong. I want to say Fiji. And of course, I've never looked at this company. Oh, actually, headquarters in Port Moresby, Papua New Guinea. I didn't know that. There you go. There we go. I'm learning something new today. This company is a little bit bigger company than Kina. Market cap of $3.57 billion. Dividend yield of 7.6% and P ratio of 8.7. So the P ratio of both Kina and Bank of South Pacific is in the area where I would be interested, lower than 10, even with a bit of a sovereign risk. I don't really care about that as much. I don't think that risk is not that high. Anyway, so in fact, this chart looks good as well. Bit of a pullback on Friday, but it still reached a long-term high, if not an all-time high. Yes, all-time high. I don't mind this chart either. Yes, if you have a look at the weekly chart, yeah, it's an uptrend. There you go. Looking pretty good for Bank of South Pacific, or maybe it's just PSP now, Financial Guru. Now we're getting into some of the bigger banks, although the regional banks first. Bank of Queensland. We have seen the share price pull back, but hasn't pulled back enough because of what happened with Bendigo. Definitely the regional banks would be less quality than the other big banks, but you might get these at better value. In fact, Bank of Queensland has a dividend yield of 5%, P ratio of 19.62. That seems like a little bit high. So I'm just wondering if their profit in last year was a little bit lower because of one-off. Yeah, their profit's all over the place. I'm not sure if P ratio for this particular bank is a good indication. Probably look at price to book. In fact, I'm going to do that right now. I'm going to look at price to book for Finchat. Where's Finchat? Where is Finchat? There it is. It's one of the reasons. There's a few reasons why I don't I just probably would prefer price to book for the banks because you don't get the fluctuation in profit you see with Bank of Queensland. So price to book is actually 0.8, and that's actually is quite good. So for instance, Kina Securities price to book is 1.8, and BSP. Wow, what's the ticker? BFL. BFL was it BFL? Yeah. And the price to book of BSP is 2. So those actually do seem a little bit high. So P ratio a little bit low, but price to book a little bit high. Bank of Queensland price to book is fairly favourable, but the P ratio is fairly high. So this is another reason why looking at a few metrics, not just one, or focusing on one, is a good thing. Anyway, so back to the chart. For Bank of Queensland, chart doesn't look that bad. A little bit of weakness in the overall banking sector. And Bank of Queensland has been. Why does this do that? Look at the volume, it's just gone silly. I have a feeling. Yeah, this was an issue. I forgot how I solved it. It was an issue, and then I solved it, and it's gone back to it. But I'm not sure why. Anyway, I can solve it later. It doesn't really matter here. And a bad week for Bank of Queensland, down 5.82%, but not as bad as Bendigo Bank. Bendigo Bank did release their results, and we have just seen the share price take a massive nose dive. So they released the results. It's not adjusting, adjust. I think I changed that. There we go. So they released results on Monday. Market hated it. And I put this purple box in as possibly a support zone for Bendigo Bank. And it's getting towards that zone. It's just above that zone right now. And so it fell 15.3% on Monday. And for the week, it's dropped, was it 17%? 18.55%. So not a good week for Bendigo. And the chart looks pretty horrific as well. Maybe a bounce here, just because it's been oversold. I'd say this is massively oversold, but would I be buying Bendigo Bank? Probably not. So P ratio is 14.4, and we'll have a look, very quick look at their price to book. Price to book is at 0.9, so fairly similar to the Bank of Queensland. So possibly okay value. I don't mind that sort of value for a bank. I would probably prefer the P ratio to a little bit lower. And I'm assuming their profit dropped, and that would mean the P ratio is dropped as well. No, has risen. If the share price doesn't rise or drop, P ratio would rise if the profit falls. Yeah. Now on to the big banks. Starting with Macquarie, which, funny enough, I thought Macquarie was a little bit bigger than ANZ, but it's not. So Macquarie has a markup of 83.5, and ANZ has a markup of 85.45. So very close. So Macquarie Bank, not that bad. So a little bit of strength in Macquarie Bank. This is a bank. They do have a banking sector. I'm not sure why, but the chart still looks good. No problems with the chart for Macquarie Bank. Again, the volume has gone bonkers. I wonder if it's in here. No, inputs, no. No, I don't have to worry about it just yet. Maybe if I just refresh. And of course, we go to Bendigo Bank. When you refresh, I'm not sure why. And I'm just going to see if that solved it. Yeah, it did. Not sure why, but sometimes just refreshing TradingView can solve your problems. Just going to, no, it hasn't. There we go. It's just gone bonkers again. Anyway, so Macquarie Bank, the chart doesn't look that bad, but it has been going sideways for a while. So it's been going sideways for about 5 months. Now on to the major banks. ANZ, they should be releasing their results soonish. There is one bank that releases the results. No. CBA releases the results normally. The other 3 banks release their results out of season. There is a reason behind that. I actually did learn this reason many, many years ago, but I've forgotten it. There is a reason. Maybe it's to do with dividends, I forget. So if you have a look at the announcements and you just go back 1 year, they released their results in, I think it was November, so May. They should release their results in May. So the company might release a trading update, or maybe not. Yeah, so ANZ, I'm pretty sure NAB and maybe Westpac release results out of season. Anyway, so they might ANZ might release a trading update just like Westpac and NAB did. But anyway, this company share price has been hit by the overall weakness in the banking sector, by far the cheapest of the four big banks. So dividend yield 7.4% and PE ratio 14.5. And I do think the price to book is probably 1.3, 1.4, which is not too much. 1.2. So I wouldn't consider ANZ to be significantly overvalued. And I have actually traded ANZ in the past when the PE ratio and the price to book get below 10 and 1 respectively. So it's not that far off. So if you do see significant weakness in the banking sector and ANZ get to that level, this could be a trade. So that's probably the only company I would consider that at this point. Next one, we have Westpac. So Westpac did release a negative update. Was it last week? The week before? 17th of, so the 17th of February. So that was on Monday. I thought it was the previous week. That was on Monday. And the share price did drop. So it was Westpac, NAB, and Bendigo. I thought it was just NAB and Bendigo Bank, and Westpac had their negative report the previous week. But so the whole reason why the banking sector collapsed is because these three banks released pretty negative reports. Look at the volume as well, pretty big volume coming in, and the share price has just dropped. So this chart is starting to look much weaker than what we have seen. So share price has remained above the 100-day moving average until now. So showing signs of weakness, and for the week, Westpac down 10.6%. That's not the sort of move you want in a big holding, in a secure, safe holding. But you've done well if you've held this company for the past year. That's one main takeaway. And by the way, PE ratio 16.3, dividend yield 4.8, not the best there. And the price to book for Westpac, I would assume this is 1.5. So a little bit higher. 1.5, there you go, 1.5. So not quite in my ballpark for a potential buy. I would like to see the share price drop at least 30% from here for me to even think about buying Westpac. That's how much it has to fall for me to even think about buying or trading Westpac. Next one is NAB. So this one, did release a pretty negative result. An update to the first quarter. Share price has just completely collapsed. Look at that volume as well. That volume is pretty, that increase in volume is a really negative sign as well. Share price dropped below 36.50. That was a negative move. And in fact, the share price is on the next previous low as well. So that's right there. So share price, if it falls below that, that would be an even further negative move. Wouldn't be surprised to see a crossover in the moving averages. We saw one briefly, but this chart is starting to turn. Looks like it is turning negative. And bad week for NAB. For the week, down 12%. 14.4% for NAB. P ratio 15.9. And I would say just like Westpac, I would probably think the PB is probably 1.5, 1.6 maybe. 2, oh, 2, that's much higher than what I want to see. Wouldn't be surprised if that is a little bit lower now with the share. I'm not sure if this updates in FinChat. In Market Index, it does update automatically. So maybe these numbers are a little bit higher because of the share price pullback. And finally, onto CBA. So you go to the week or the daily chart. Funny enough, you start on the weekly chart. If we go to NAB, that's really interesting. So if we go to daily, it's normal volume. If we go to daily chart and then go to CBA and then go to the weekly chart, it's not adjusting here. The volume's not adjusting when you go in different time periods. That's really interesting. So what I'm going to do is I'm going to go to weekly chart and then go to NAB and then go to the daily chart. And then you see really low volume. Can't see the volume at all. Anyway, so CBA, I wouldn't be panicking just yet if I was trading CBA. I would imagine those who have held CBA for like 30 years wouldn't be panicking at all. They wouldn't care at all because they're up significantly, and they probably don't want to sell because at least they're getting a pretty nice dividend yield on their original capital, and also they don't want to pay capital gains tax. Anyway, so pretty bad week for CBA. However, not a completely negative one because the share price has remained above that dashed line. That's the important dashed line for CBA. Share price has drifted or dropped below the 100-day moving average. It did that briefly back in April 2024, just briefly, and then rallied. It has touched the 100-day moving average a couple of times and has rallied, but it was a bad week. Share price has dropped. In fact, looking at the share price has dropped 10%. Is that true? Has the share price for CBA dropped 10%? 8.3%, close. It did drop 10.9% in June 2022. So that's the last time we saw this sort of drop. This is the second worst week for CBA in the past 5 years. The weekly chart, again, not showing signs of complete weakness, of trend reversal at this point. It's just a pullback. So this could be a buy the dip situation for those who think there's value in CBA. I'm not sure what you're looking at if you are thinking that. But, by the way, the PE ratio for CBA, hasn't got a PE ratio in TradingView. So let's go to FinChat. PE ratio is probably 25. Price to book, 3.2. So PE ratio is 26.7. Price to book is 3.5. Historically, really extremely high for this type of company. And that's why Alan Kohler apparently says CBA is in a bubble. Anyway, that's all I have for this video. A little bit longer than usual. That's probably because I've included some more Australian indices. If you do like that, or you want me to include another Australian index, maybe the telecommunications index or something, just leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.